Okay, so we've been dealing with property, plant, and equipment, and we're going to continue with that topic today. Yesterday we were looking at how to actually account for components of property, plant, and equipment. So today we're going to look at we're going to finish the example that we did, and then we'll also look at subsequent expenditure as well as how to account for inspections. So I'll just share my slides. Okay, let me share my slides. Okay, so I believe everyone can see my slides. I'll just go over what we were doing yesterday. We were dealing with this last example. I actually just changed the page number. If you looked at the previous page number, it said page 320. It should actually be page 380. So you're required to prepare the journals for 20X2. So yesterday we didn't finish with that. We prepared most of the journals for 20X2, but we didn't finish with the last journal for 20X2, which was the depreciation journal. So these are the journals that we needed to account for. Maybe let me open my Excel that we're working on and share that. Okay, so let me share the Excel document. So I asked you to prepare the journals, and we went through the journals. We accounted for the impairment loss and the acquisition of the plant, and the last journal that we had to account for the financial year was the depreciation journals. So depreciation, actually the depreciation journal, you can add the depreciation together, the $100 and the $70. So you'll have debit depreciation, and then you'll credit your accumulated depreciation of the plant without the engine, which is 70, that amount, and then you're going to credit the accumulated depreciation of the engine, which was $100. Were you able to finish that in this journal, and did you get it correct? Anyone? Okay. I think silence is confirmation that you've actually completed it. Let me just turn off the camera. All right. So let us continue with what I want to cover today. All right. So again, I go to the slides, and I've just showed you the journal, the same journals that we did in Excel are presented in the PowerPoint slide. Okay. So that was it with regard to major components. The next aspect that we need to look at is major inspections. An asset may require regular major inspections to ensure continued safe operation. For example, an aircraft. So an aircraft, after a certain number of flight hours, will have to be inspected to make sure that everything is still working as it should be. So major inspections, when they occur, should be capitalized to the asset, right? And this happens when the cost is incurred or when an obligation arises to do an inspection. All right. The cost of the inspection must be depreciated over this estimated period until the next period for inspection. So if it's an aircraft, for instance, you might be told that the aircraft needs to be inspected after every 1,000 hours. All right. So then the 1,000 hours will actually be the time period over which the inspection should be depreciated over. Okay. Or you can have it over a number of years. So an inspection needs to be done, let's say, on a factory building after every 2 years, for instance. Then after every 2 years, you need to do an inspection, and you should account for depreciation over 2 years until the next period of the inspection. At initial recognition, a part of the cost of the asset should be allocated to the inspection cost. So when you initially buy an aircraft, for instance, on that date, a part of the cost should be allocated for inspection costs. Obviously, a new aircraft would have already been inspected. All right, so it would have already been inspected. So it might be that if you're given a cost separately of what the inspection was, or the cost of the inspection, then you would depreciate that until the next period of the inspection. Otherwise, if it's not given separately, the same approach that was used for components would be used for inspection. So you depreciate the whole aircraft, and at the time when you do an inspection, at that point in time, then you'll capitalize the new cost of the asset. All right. So let us look at an example, example 3, gripping up. That's on page, and gripping up, it's called example 20, and it's on page 381. I hope you all have a textbook by now, because it's very important that you do have a textbook. All the exercises I'm referring to are from the textbook. So I'll read the scenario. New legislation was promulgated on 1st September 2021, whereby all public transport buses are required to undergo regular major inspections every 2 years. Vroom Limited owns a bus that has a carrying amount of 80,000 as at 1st January 20X1. The bus is depreciated on a straight line method to a nil residual value over its remaining useful life of 10 years, calculated from 2 January 20X1. Right. So the useful life on 2nd January 20X1 is 10 years. A major inspection of this bus was performed on 1 October 20X1 at a cost of 20,000. You're required to show the journal entries relating to the current major inspection as well as depreciation for the current year. And then the second requirement, you should present the bus in Vroom's Limited statement of financial position at 31 December 20X1. All right. How would you go about this? How would you go about this question? Anyone? Okay, expect participation in the class and not just silence. I'm not just here to give you the answers. what would you do? Look at requirement 1, show the journal entries relating to the major inspection as well as the depreciation for the current year. Let's just look at the major inspection. So before the required, the last bullet gives us the information. A major inspection of this bus was performed on 1st October 20X1 at a cost of 20,000. What you do there? All right. In the chat, Alpha says you debit the major inspection with an amount of 20,000 and create bank with 20,000. All right. So I ask that major inspection, is it an asset or an expense when you say debit major inspection? Will it be an asset or an expense? Alpha Dube. That journal entry is correct, by the way, but I just want to find out whether you know the classification. Would the major expense inspection be characterized as an asset or an expense? Expense. Alpha Dube says expense. Anyone else has a opinion on that? Okay. So that is correct. You debit the major inspection, but it's not an expense. Why? Because it's capitalized to the cost of an asset. So it's actually an asset. All right. So remember, we go to when we say it's capitalized, that just means it's added to the cost of an asset. So you always have to go back to the theory. Major inspections should be capitalized to the cost of an asset. So when we talk about capitalizing something to the cost of an asset, it means adding it. So it becomes an asset, for the business, and it's not actually categorized as an expense. It's an asset for the business. That is why it should be treated as an asset. Okay. So the journal entry, as it's given in the chat, I will not. It was given debit your major inspection asset and then credit your bank. Okay. So let us go to the next point. Now, depreciation. Calculate the depreciation or show the journal entries relating to depreciation for the year. Can anyone help me with the depreciation for the year? Can anyone help with the depreciation for the year?
The next slide. Janset, please go back to the slide of the example.
Okay. I'll give you 2 minutes to do this, and then you provide an answer. Okay, so what is your answer? Okay. bus, so Alpha Dubim says the bus inspection depreciation will be 2,500. Dewana Joseph just mentions an amount of 10,000, and Haufiku just mentions an amount of 8,000. You have to mention what does this actually relate to. Okay, the 2,500 is the depreciation on the inspection. That is correct. So how would you get to that amount? So let us look at that, how you get to that amount. I'm just going to the journal entries now. You see that the accumulated depreciation on the bus, we were told that the bus had a carrying amount of 80,000 on 2nd January 20X1. So it's just say that take that 80,000 and you divide it by the number of years to obtain an amount 8,000. That's the depreciation on the bus for that year. And then the accumulated depreciation on the major inspection is 20,000, and it says that the inspection needs to be depreciated over its useful life. And the useful life of the inspection is 2 years. So you say 20,000 divided by 2. However, since the inspection was done in October and the year end is December, you're going to take that 20,000 divided by 2 and apportion it times 3 over 12. So there was an answer of 10,000. That 10,000 would have just been the 20,000 divided by 2. That would have been the depreciation for the entire year. But since this inspection was only done in October, then you have to apportion it for the number of years. So you'd say that 10,000 times 3 over 12 gives you the 2,500. 2,500 plus 8,000 gives you an amount of 10,500. Are we together?
Yes, sir. Yes, sir.
All right. Great. So one thing that you will notice is that the depreciation expense is just shown as one line item. There's the 8,000 plus the 2,500, and it's reflected as an amount of 10,500. And I want also to go back to the previous journal that I was talking about, where you debited the first journal where you had to capitalize the cost of the major inspection. So the amount was debited 20,000 and you credited bank. But what is important is that you show that this is shown in the statement of financial position. Then I can understand that you realize that this is an asset. All right. The A in brackets there stands for an asset. All right. And SFP stands for statement of financial position. And we know in statements of financial position, we only show assets, liabilities, and equity. Depreciation is an expense, so it's shown in the statement of profit or loss. In the statement of profit or loss and other comprehensive income, that's where expenses are shown. All right. Accumulated depreciation on the bus and accumulated depreciation on the major inspection, those are negative assets which are reflected in the statement of financial position. Okay. Any questions? Looks like there are no questions.
How we
Then
2,500.
the 2,500, I mentioned that. Let me go back to the question. The question tells us that the buses are required to go have major inspections every 2 years. Okay, so a major inspection was performed on 1st of October 2020 X1 at a cost of 20,000. So you'll take the 20,000 and divide it by 2 to get an amount of 10,000 per year. But since the inspection was performed in October and the year end for this company is December, So the second requirement tells us to present the statement of financial position as at 31 December. That is the year end. Maybe it should have been indicated in the question that the year end is December. So then you have to apportion it for 3 months, 10,000 times 3 over 12. Or you just say 20,000 divided by 2 times 3 over 12. That's how you arrive at the 2,500. Okay, and the last requirement that you had to do was to present the BUS in full statement of financial position, to present the BUS. So how would the BUS be shown? So we're not given information with regards to other property, plant, and equipment. So assuming that the BUS is the only asset, all right, you would have one line item under non-current assets called property, plant, and equipment. So you shouldn't abbreviate. You should just write property, plant, and equipment. So what amount are you going to show it at? You take the carrying amount of the BUS at the beginning of the year, that was 80,000, right? There was the major inspection that you capitalized, and that 20,000 is capitalized to the cost of the BUS. So it's actually to the carrying amount. So it's at the carrying amount, it's 80,000 plus 20,000. Then you subtract the depreciation or accumulated depreciation. So here we have the depreciation for the year. On the BUS was 8,000 and the portion of the inspection was 2,500. So property, plant, and equipment will be shown at an amount of 89,500. Just one line item. You will not split it and say BUS, major inspection, and then you show the amounts at cost minus accumulated depreciation. You just show it as one line item. Are there questions? Okay, it seems that there are no questions. Let us continue. Next, we're going to look at subsequent expenditure. What is subsequent expenditure? Subsequent expenditure is expenditure after the initial recognition. So once you purchase an asset, you will recognize it at its cost price, that is the initial recognition. However, you might have additional expenditure after the date of initial recognition, and that expenditure is known as subsequent expenditure. So any subsequent expenditure on the item of PPE should be added to the carrying amount of PPE when it's probable that future economic benefits in excess of the original benefits will flow to the entity, and all other expenditure should be expensed. So any subsequent expenditure will be added, will have to be added to the carrying amount when it is proved that future economic benefits will flow to the entity. If future economic benefits will not flow to the entity, then it has to be expensed. So in this instance, when we look at the BUS, this major inspection cost was actually a subsequent expenditure. And it's subsequent expenditure that actually brings value because the BUS can only operate if it's inspected every 2 years. If it's not inspected, it will not be allowed to operate on the roads. So the inspection is expected to bring future economic benefits because now the BUS actually meets the law, it has been inspected, and it can operate on the road. If it doesn't meet that inspection, if it wasn't inspected, the BUS would not be roadworthy and it would not be allowed to operate, and thus no benefits would flow to the entity. All right, so that major inspection in our example that we did would be capitalized, is added to the cost of, or to the carrying amount of the BUS, and that's exactly what happens to PPE. When future economic benefits flow to the entity, then that amount must be added to the carrying amount. If future economic benefits do not flow, then to the entity, that subsequent expenditure must be expensed. So subsequent expenditure can be broken into two. That is capital expenditure and revenue expenditure. A capital expenditure is expenditure that will actually provide future economic benefits, and this is the expenditure that will be added to the carrying amount of the asset. So what examples of capital expenditure? The costs that are incurred on the initial acquisition of PPE. So initial acquisition of PPE, that cost is capital expenditure. Any subsequent expenditure that increases the earning capacity of an item of PPE. So for example, let us say you have flats, right? And you want to increase the income earning potential of that flat. So you extend the flat, right? So maybe you build upwards, you add an extra floor, all right, so that you can rent out those additional rooms, for instance, that you have. If that happens, that additional extension or floor that you've added to the building will give you future economic benefits, and any cost that you have incurred as a result so the cost of constructing the additional floor must be added to the original cost price of that flat, all right? Because, to the carrying amount, all right? Because it's going to give you additional benefits. So what happens? What are the characteristics of capital expenditure? Capital expenditure is non-recurring by nature. So you don't incur it on a regular basis. So once you have expanded your flats, once you've built an extra floor to the building, you're not going to do that every year, all right? That's why we say it's non-recurring. You do it maybe once, maybe you repeat, it might happen in future that there's another capital expenditure, but it's really non-recurring by nature. And the business is expected to reap the benefits from it for more than one accounting period. So that additional floor that you've added to your flat, the additional level that you've added, since now you have an extra room, you can actually rent out those rooms, and you're going to reap the benefits of renting out those rooms for more than one accounting period or for more than 1 year. So that's a capital expenditure. Examples of capital expenditure: money spent on the installation and erection of PPE, so installing and building property, plant and equipment, wages paid for the construction of the building, any structural improvements or alterations that are made in property, plant and equipment that result in an increase in their useful life or profit earning capacity, any structural improvements. So maybe let's say you have a building that was dilapidated and was going to collapse, and you brought in some engineers to fix the building. Now you have improved the walls, so now the building will not collapse anymore, and you have actually increased its useful life. That will be considered capital expenditure. Now, another type of expenditure that we have is revenue expenditure. And these are costs that are aimed at maintaining rather than enhancing the earning capacity of the assets. So what are characteristics of revenue expenditure? It's incurred on a regular basis, and the benefit from this cost is obtained over a relatively short period of time. Okay, so for example, let us look at NUST. For instance, NUST has classrooms. If you look at the lecture building, the classrooms in the lecture building. Now, assuming NUST goes and paints all the classrooms in the lecture building, okay? The painting cost is considered a revenue expenditure because the buildings will have to be repainted on a fairly regular basis, okay? But by painting it, you're just enhancing the look of the building or the classroom, and you're not really going to get more economic benefits, because if the classroom can take 70 people, for instance, it can still take 70 people. You've only enhanced the look, that so now it doesn't look dirty, all right? It actually looks better after painting. All right, so painting will be considered revenue expenditure. So examples of revenue expenditure, I've already given you one: repainting costs, repair costs. For instance, if a door of the classroom is broken, right, and then they just come to replace the door, that doesn't really increase the earning potential of that classroom. Okay, you've just replaced a broken door. Okay, if the door wasn't broken, it would still operate in the same way. All right, any maintenance charges, it's also considered revenue. So revenue expenditure do not increase the earning capacity of the asset, but they maintain it. All right, they maintain the earning capacity. What happens to revenue expenditure? Revenue expenditure must be expensed in the statement of profit or loss when it's incurred. So for example, painting, you'll debit your painting expense or repairs and maintenance expense, and then you're going to credit your bank. Okay, so revenue expenditure is expensed in the statement of profit or loss. Are there questions? No questions. All right, so let us move on. Let us move on and just summarize what we've learned. So when you're looking at subsequent expenditure, you have to ask yourself some questions. Is the expenditure incurred to either increase the capacity or output, or to ensure continued use of the asset? All right, I repeat because someone was speaking while I was speaking. I repeat, in order to determine what to do with revenue expenditure, in order to determine what to do with subsequent expenditure, ask yourself, is the expenditure incurred to either increase the capacity or output, or is it incurred to ensure continued use of the asset? You also have to ask yourself, can it be linked to new future economic benefits? All right. If the expenditure is of a day-to-day servicing or maintenance or repair nature, then that expenditure needs to be expensed. However, if it increases the capacity or the useful life of a property, then it's going to be capitalized. All right, so let us deal with an example. This will be the last example that we're dealing with for this set of slides. A building was erected 10 years ago at a cost of 10 million, which included 500 for painting the building. The building should be painted every year. The cost to paint the building in the beginning of the financial year was 750,000. Question, will the paint be treated as a subsequent cost and thus capitalized, or will it be treated as an expense? That's the first question. And the second question is, what will cause the paint to be treated as a subsequent cost? So this is for discussion that we need to discuss now. I expect input. Okay. Will the paint be treated as a subsequent cost and thus capitalized, or will it be as an expense? This one I should change. So let us deal with the first question. Will the paint treated as a subsequent cost and thus capitalized, or be treated as an expense? Should I pick up names? Because it seems participants are silent. Colin, can you help me? Can you help me, Colin? Colin Aluvilu. I think I need to be giving marks for class participation to improve the participation. I think I might just do that. Since these classes are recorded, I can easily gauge who's participating in the classes and who is not. And I can actually give bonus marks for class participation. All right, Colin Aluvilu, I'm waiting. Henrina Elia, can you help me? Henrina Elia. Henrina Elia.
I'm still trying to figure it out, sir.
What about Alino? Alino Alukonka, can you help me? So someone who has the answer, can you help me with this? This is the learning process. This is how we're learning. You just interact. It's better to be wrong or even right here. It's better to be wrong here, and then you understand where you went wrong and correct it. Once you have the test, right, then you actually know the answer where you know where you went wrong. Ali, I'm waiting. You can also type in the chat, those that do not have mics. So there's no excuse for not replying.
Sir, I think it's a subsequent expenditure, but like it falls like under the revenue.
Okay, subsequent expenditure of a revenue nature. So what happens to subsequent expenditure of a revenue nature? What do you do with it?
It's like it does not like enhance like the earning capacity of like the whole asset. It's just for the maintenance purpose.
Okay, so if it's for maintenance, do you add it to the carrying amount of an asset or do you expense it? Go ahead, Andrina. You're correct. So what does it mean? Is it treated as an expense or is it added to the value of, to the carrying amount of the building?
I say I don't think they are like added because it says what it doesn't increase the. I don't know. I don't know.
Okay, so if it's not added, then it must be expensed. You only have two options. Either added to the cost price of an asset, in that instance it's capitalized, or if it doesn't enhance, as you correctly stated, that it doesn't value or it doesn't really increase the value of the property. So in this instance, it must be expensed. Okay, so you debit your painting costs, expense in the statement of profit or loss, and then you'll credit your bank. Okay. The second part of the question, what will cause the paint to be treated as a subsequent cost that is capitalized? What will cause it to be treated as a subsequent cost that is capitalized? So anyway, they're all subsequent costs. The painting is subsequent cost. As long as it's after initial recognition, it is a subsequent cost. But the question is, what will cause it to be treated, what will cause the paint to be treated as a subsequent cost that is capitalized? What is the criteria, if I put it another way, what is the criteria for capitalization?
If future benefits are expected to flow into the business.
All right. You have so we expect future economic benefits to flow from it. What else?
If the expenditure prolong the useful life of the building.
All right. If the expenditure, so if the painting enhanced the useful life or increased the useful life of the building, then it could have been capitalized. All right. So if you look at the two questions, one was just the second one was asking you basically what is the criteria for capitalization of a subsequent cost, and then the first one was just saying how is the paint treated? All right, how is the paint treated? Is it capitalized to the cost of the asset, or will it be expensed? All right, or will it be expensed? So that was it. With regard to that, the rest is subsequent measurement, which we're going to look at in more detail. So for us, for Financial Accounting 201, subsequent measurement, how can assets be carried, or property, plant, and equipment? Property, plant, and equipment will be carried using the cost model, which is cost less accumulated depreciation and accumulated impairment losses. That gives you the carrying amount. Yesterday we dealt with an example where we had accumulated depreciation and accumulated impairment losses. There's revaluation model also for IAS 16, but we do not deal with that revaluation module. And the revaluation module, instead of using the cost price, you're going to use the fair value minus any subsequent accumulated depreciation and impairment losses. All right, so for Financial Accounting 201, we are only going to look at the cost model. So let us summarize it. When you measure PPE, at initial measurement, you're going to measure the PPE item at cost. Initial measurement, so let's say after a year, if you, how do you treat that item of PPE? That now deals with subsequent measurement. The item of PPE can either be measured using the cost model or the revaluation model. If it's measured using the cost model, you take the cost minus the accumulated depreciation minus any accumulated impairment losses to arrive at the carrying amount. However, if you use the revaluation model, you'll take the fair value minus the accumulated depreciation and accumulated impairment losses to arrive at the carrying amount. Okay, so in this set of slides, we've learned how to account for major components and major inspections, and also how to classify expenditure as either capital or revenue expenditure. So read up part 3 on the slides, which deals with depreciation and changes in the depreciation method. And I will see you tomorrow. Okay, it's very important for you to go through your old material, especially if you still have a difficulty understanding PPE. Go through the Financial Accounting 101 notes. Our test is actually in 2 weeks, or almost, yeah, two and a half weeks, let's say, from now, on the 18th of March, right? So you really have to be well accustomed with the topic. I will organize a tutorial. We have some tutors from Deloitte that have volunteered their time, but you will have to do the examples beforehand. I will instruct them not just to give you answers, they need input from you. All right, if there's no input, then we're just going to cancel the tutorials, because then it's not worth it. It's not worth their time to come and assist. All right, but that I will communicate. I'll announce on e-learning exactly when we'll start, and I'll also be announcing during the class time. All right, so read up on part 3 of the slides of PPE, and I will see you tomorrow. Bye.
Good day, sir.
All right.
Bye, sir. Thank you.
Bye.